Joining me now to discuss is Stacy Rasgon. He's Bernstein Research Senior Analyst on the semiconductor. So, Stacy, build some context around this a little bit. I mean, is, first of all, the CHIPS Act kind of a make or break for this project? How important is the project for Intel? How should we read it all?
Yeah, so I think Intel is not stopping their plans for the initial phase of this, which was the original $20 billion. It's 2 facilities in Ohio. What they're saying is they need the CHIPS Act for the expansion phase. They were looking, remember, ultimately to build up to 8 fabs and spend like $100 billion in the region. And so they're saying for that expansion, they need the CHIPS Act. Now, it's a lot of money they're spending. People have to remember the CHIPS Act itself is not actually that much money. It's $52 billion over 5 years for the entire U.S. semiconductor industry. So in terms of Intel actually needing the CHIPS Act to make that broader expansion viable, my guess is that they do not need it. It's more going to be a question of do they have the demand to fill it. But obviously, if they can get those dollars, that would be good. And they're certainly trying to put pressure on Congress, as we can see right now, to actually get the legislation passed so we can go along with this. But it doesn't sound like they're stopping the initial phase. What it did sound like is they were stopping the groundbreaking ceremony, I guess, to try to apply that pressure.
Sure. Obviously, if there's going to be, public money available, you might as well fight for it sooner than later. And just in terms of this initiative in general, I mean, $100 billion over how many years for Intel? And, is this a kind of a, bet the future of the company type of move? And is it going to work?
Well, so obviously it's a bet the company trying to move. And we'll see actually if they wind up spending this or not. I mean, Intel's sort of running all over the world, building fabs everywhere in some sense, where they can get paid to do it. So they're looking to build, obviously, in Ohio. They're building in Arizona. They're building some packaging stuff in New Mexico. They're building out in Germany now. They're going to get, billions of dollars potentially to build out in Germany. So they're building everywhere. But I mean, the broader state of the strategy for Intel is a bet the company strategy. They are betting on growth. They are betting on building out a foundry business in order to compete with TSM. And the targets that they've given the street incorporate those kinds of numbers. And so certainly Intel, if they succeed in this, it's going to look very different in 5 or 10 years. And frankly, if they fail, it's going to look very different in 5 or 10 years. The Wall Street right now doesn't really know which way it's going to be, which is why the stocks had issues, right?
No, exactly. I was going to get to that. I mean, I think have been cautious and, correctly positioned on the stock. It's cracked through 40 to the downside. That had been a sort of seeming floor for a couple of years here. Where does it sit right now in terms of valuation? What's priced in?
It's hard to talk about valuation with Intel because it sort of looks kind of cheap on earnings, although not necessarily cheap relative to its own history, cheap versus the sector. But there's no free cash flow. All of this stuff, even with the subsidies, basically takes all of their cash and puts it into the ground. The guidance they've given on this have actually incorporates subsidies, by the way. But their capex or their free cash right now is 0 to negative, and so on that basis, it's effectively like infinitely valued, right? There's no free cash to value on it. So if you're buying the stock today, you're not buying it for the trajectory this year or next year or even at the year after that. You're betting that in 5 years or 10 years, they can turn the ship around. They can actually execute on the strategy. They can drive growth. And ultimately, these investments will turn into real earnings and real cash flow and bring them back to the dominant position that they used to have. But that is a huge unknown right now. And right now, the current level of execution and the trajectory they're showing is not going that way. It's actually going the other way.
Yeah, it's a lot to look through, especially when the overall sectors also, come down by
it's not helping,
so off its highs. So. All right, Stacy, great to talk to you. Thanks very much.